blockchain has two kinds of potential for the financial industry. One is to enable existing financial institutions to have better, more effective, more efficient systems and incorporate new business models into their existing business. Better systems in the sense of essentially removing the need to reconcile so many disparate databases, having a single shared source of truth where all the different assets can be moved and tracked, and real-time accounting based on that sort of infrastructure is now possible. The other prong is as we move towards a world in which the foundational elements of our society are natively digital. So instead of being issued according to laws, being issued as entries in centralized databases that are reconciled with one another, we can move to a world where we have natively digital elements like money, like different kinds of securities, like identity, like legally enforceable agreements, like government certificates, all realized and appropriately accessible and fluidly transmittable on a blockchain infrastructure.
What's happening with the infrastructure for crypto asset markets?
The infrastructure for crypto asset markets is maturing quite dramatically. It's growing at an exponential rate. Ethereum, the location where most of the standards are being built and where most of the crypto assets are issued, around 90-something% of the crypto assets are issued on the Ethereum platform, is growing in its capability quite dramatically. So the foundational elements, things like fungible tokens, non-fungible tokens, tokenized securities, atomic swap protocols, naming services, governance tools, accounting systems, and so many more elements are being built on Ethereum. All of those products are being used by essentially the builders of the foundational infrastructure for the ecosystem. They're being composed into more and more sophisticated offerings. Some of those offerings very soon, probably early 2019, will probably gain significant consumer attention. So those will be games and elements in the journalism space and other things that real end users can sink their teeth into. Those have all been enabled because we've built so many pieces that can be put together for real applications.
The banks may be ready to embrace blockchain as a technology, but they're still skeptical about cryptocurrencies.
Some of them are.
Yeah,
so I mean, Goldman Sachs and Morgan Stanley and others are putting together have put together trading desks to trade these crypto assets. There are many large hedge funds that are doing the same thing.
But UBS recently said that Bitcoin fails to meet the criteria to be considered money or a viable asset class due to its potential for high price volatility.
Bitcoin is not necessarily money, it's Bitcoin. It can be used as a payment mechanism. It's being used as a store of value. We at our company Consensus don't pay a lot of attention to Bitcoin or cryptocurrencies really. We build decentralized application on decentralized application platforms, mostly Ethereum. But we are involved in the creation of and the use of many different kinds of crypto assets. So the world of crypto assets, whether they're that narrow slice that's cryptocurrency or crypto equities or crypto commodities like Ether and commodities for storage and bandwidth and compute, different kinds of bonds, those things are becoming increasingly utilized by legacy world financial institutions. So Daimler-Benz and some banks have issued bonds on the Ethereum platform, and we're aware of a whole bunch more activity along those lines.
How can cryptocurrencies be made to work fairly and independently?
It's a very big question. So I believe that Ether and the Ethereum network operate quite fairly. We have decentralized governance where many different actors are involved in different kinds of decisions. So core developers are significantly involved. The community is significantly involved. The foundation is significantly involved. Exchanges have a very big role. Miners or validators have a big role. Pools have a very big role. Whenever we have an issue in our space, all of those voices weigh in very significantly. If any one of those elements goes rogue, probably the other elements will continue the Ethereum platform, where the other element, that rogue element, might fork off and start its own new system.